Hello investors. A very big welcome to Teji Mandi. I'm your host Moshmi Paul. This is our Stock Market Basics podcast where I will break down all the concepts related to the market and help you understand them in a simplified way. In our last podcast, I explained you briefly about fundamental and technical analysis. And in this podcast, we will cover the basics of IPO. Initial public offering, that is IPO, is a process where a private company issues shares to the public for the first time. Basically, a private company becomes a public company when it enters the stock market. Before the IPO, a handful of shareholders, angel investors, and founders operated the company. But post-IPO, the company opens itself to the public and gives out shares for people to invest. Now, what is the need for the company to go public? Well, it depends on company to company and their needs. Some companies apply for IPO if they want to raise more money to expand their business or need capital to develop more products or pay off debt. Meanwhile, some companies launch IPO to make their brand famous and create a buzz in the media about them for greater public awareness. The process of launching an IPO is daunting. It includes a host of activities and requires the involvement of several institutions. It takes months together to come up with company valuations, IPO price, securing underwriters, preparing DRHP report, getting SEBI's approval, etc. Let me quickly walk you through the IPO process. First, the company approaches an investment bank. The job of an investment bank here is to decide the initial share price, fundraise amount, and types of securities that it will offer. The second step is to create a red herring prospectus. This is a document where the company shows its financial records, future plans, management background, internal and external risks, etc. The third step for the company is then to approach SEBI for approval. If SEBI is satisfied, it gives out the green light and also gives a date and time for the IPO to launch. After approaching SEBI, the company approaches BSE, whose purpose is to grant approval for securities. The fourth step for the IPO is the subscription, where investors apply for the shares. This is like a lottery system. In cases of oversubscription, investors may not get the number of shares they originally wanted. Lastly, the shares are allotted to the investors on the listing day. So this is how tedious it is for a company to launch an IPO. But thankfully for an investor, applying for an IPO is not as painful a process. Anyone who has a Demat account can apply for an IPO. Most investors apply for the IPO through their broker's app or via bank through the ASBA facility. Now the process part is all okay. But what are the benefits of applying for an IPO? Well, here are a few major advantages. If a reputed company is entering the market, you get to invest in their shares first. If the company does well, the value of your investments would also rise along with it. Most of these IPOs are launched during the bull markets. Many positional traders use these opportunities to make listing gains when the share price opens at a much higher price due to strong demand and market bias. Well, that's all we have on IPO. Thank you so much for listening to me here. I will soon come up with another exciting episode where I will explain to you what is a bull and a bear market. Make sure you subscribe to our podcast so you never miss an episode. Till then, please stay safe. Goodbye.